All right. So first of all, it's a pleasure to be here again. I think Teamz is getting much bigger, and hopefully next year we'll see Teamz even getting even bigger. So today I feel like we have a really great panel of great investors and founders, and I want to start off with first of all, of course, an introduction from everyone, starting with Sungku. And just a brief word about who you are, what the company is doing, and also, I guess, how do you define AI, right? There are a lot of definitions about AI, but you know, in today's day and age, how do you define it in a product kind of sense?
Hello, my name is Sungku Kim from Nexus One. Nexus One is VC based in Korea. We started in 2018. So we have 40 more portfolios, and good to be back here. So question was AI, right? Define the AI. So at the first time I heard about the AI sector in maybe late 2022. So okay, back then was AI narrative and Web3 combination and relationship was really low. So I thought, okay, another narrative came. But we didn't deeply understand how related with the AI and Web3 sector, so we didn't invest that much. So we missed a lot of opportunity to invest in. But later on, we are understand about the AI and Web3, how it related. Because at the first, blockchain can bring transparency and traceability to how AI make decisions. Trust in AI, so requires editable data and traceability. I think blockchain and Web3, we can offer that info. So that's very important part for AI too. If AI agent want to transact, Web3 can help it because they need a crypto and smart contract to enable them. So I think the Web3 and AI is really related very closely, and if we don't offer the infrastructure to AI, it's going to be a problem. So this is how we define the AI and Web3 related right now. So we try to invest in AI sector too. So we structured 3 layers. First of all is the protocol, and second is the AI infrastructure, and 3 is the powered by AI, and the Web3 service of the powered by AI. That's how we define and try to invest in.
Konnichiwa. Hello everyone, my name is Jessie and I'm the co-founder of SoSoValue. And a bit of the background of who we are, what we did. We actually come from a background of investors and tech founders before meeting together in crypto. And one of the biggest things we find when we enter crypto is this field is so difficult to navigate and understand. There's no good infrastructure for our investors to figure out what is news, what is truth, what is opinion, what's facts. Like in traditional finance, we have Bloomberg, where we used to having this infrastructure. So the first thing we did is we have a team of 10 people whose job is to do research on a daily basis. We have morning meetings, we have evening meetings, understanding what's happening in the macro market, what's happening in individual narrative, etc. In crypto, we found that it's insanely difficult. On a given day, we need 20 different tabs open, right? You have your Discord, your Twitter, your different coin services. I'm not going to name names, but you pay like at least $5,000 per month to have quality information. We said, no, crypto is about equalizing the playing field. Because on an average, one wallet has around $200, that's it. To pay for quality information for $1,000 per month is not what crypto should be about. So we got really lucky with ChatGPT, because we realized that then we can use AI to help us sort out the information chaos. Right, so we got really lucky from an internal project that's actually just helping us investors to find the big alpha. We are able to ship it as a product. So that's when we raised around a year ago. And fast forward, a year later, we raised 2 rounds of 20 million. Supported by great investors like Sequoia China and Inura, etc. And we now have 40 million registered users on our platform called SoSoValue.com, and it's available in Japanese as well. If you open it up, you can see a very familiar structure that kind of looks like a Bloomberg AI, which is separating secondary market facts, news that's tagged by AI in different sectors. And we also have our own forum as well. And as of a month ago, we opened up our AI API for all builders to build information, like a smarter information flow for investors. And based on that, we also launched our own on-chain ETF, because after we built this platform of traction, another problem we want to solve is we want to make crypto easier for people to understand and then participate in. And in stock market, we already know that the Warren Buffett and Charlie Munger of the world already told us the best way to win in the long run for individuals like us is to invest in indexes and to hold the best premium assets for a long time. And in crypto, that's not yet the case, right? But we believe that right now, crypto is what? Almost 3 trillion, especially when Trump took office, it was around 3 trillion. But in order to get 10x, to get to 30 trillion, we need more long-term, healthy people who are rational, who are not, only the casino, PvP trades, to be able to park their significant amount of assets into crypto. And with that, we believe that we need a spot ETF that's on-chain, that's transparent, and all of the underlying assets put in a trusted licensed custody in each individual country, and that's what we have built at SoSoValue indexes. And as of now, we have more than 300,000 wallets trusting us after a month's launch, and we're now at a TVL of 156 million, one of the biggest pool on base. You can check this out right now, and that's what we're here trying to do. We want to make crypto easier to understand and invest in utilizing AI.
I saw this just a brief introduction, so by way of introduction, I would like to tell a little bit about the story and history of how Outliers started. So Outliers, 10 years ago, when I was a student at MIT, it was just an MIT special interest group on sci-fi inspired research. And I feel very pumped because my research colleague, my best friend and professor at MIT is also here in the audience. And I still feel very unbelievable. 10 years ago, we were just a course at MIT called MIT Science Fiction Prototyping. The first 7 weeks, we have a lot of students like this, around 400 students, to learn how to read sci-fi novels, watch sci-fi movies, TV series, and the rest of the 7 weeks, we need to present our imaginary prototypes or demos in front of the founder of Y Combinator, Singularity University, Distinct Research, Google X, and our director back then, it was Joito. And it was one time when some students in our student club mentioned about syndicating a small fund to invest in each other, and they nominated me as the GP below. I didn't really have much financial background, and within a week, we syndicated over $5.4 million from MIT students, professors, staff. But then very soon we entered into a problem, which is none of us, when we were a student at MIT, were accredited investor or qualified investor. So then we had to return all the fiats, US dollar, back to all those 44 students and professors who believe in us, who want to do this together as a fund. We, in the end, declare ourselves as an investment club and then syndicate Ethereum. So back then we syndicated over 830,000 ETH. And a backstory or a joke that a lot of our internal members or our LP have been making fun of me is, in the past 10 years, the best investment decision making that I could ever make is to not invest. Just to hold on to those 830,000 ETH that would have been worth like maybe 3 billion, or be higher than our fund size of today. But of course, if all the VC funds are doing that, like Bitcoin's price wouldn't be as of today, Ethereum's price wouldn't be as of today. It is really thanks to all the developers, researchers, startup founders, VC allocators who have been making transactions and really building utilities, foundations for the industry, such as Teamz, of hosting this conference since like 2017. So that the community has become finally mainstream. I feel especially pumped back in January when Ira, our CTO, and I went to attend, was invited by President Trump to attend the US presidential inauguration. That is the first time they have 400 crypto founders in the room and being considered mainstream. It has took us almost 10 years to be recognized as a venture investor, venture capitalist, or invest in something that is considered mainstream. And in a snapshot, we have invested in blockchain crypto for the past 10 years, AI for only 2 years. Starting this year, we are launching 2 new funds. Outliers Scientific Fund focusing on space travel infrastructure in the next 12 years. And Outliers Computing Fund that is focusing on any software, internet, computing related startups that could involve biocomputing, neural computing, quantum computing, AI computing, blockchain computing. The main difference between these 2 funds is the Outliers Scientific Fund means to invest in something whose product market fit feedback cycle is longer than 1 year or 10 years. But the computing fund requires our startups to, from ideation to prototyping, within 1 month. Pretty much if the 3 of you guys are fresh graduated from the same college, same labs, and you guys propose like a new Web3 or AI application idea to Outliers Fund, I would request next week you bring up your prototype, the week after next product, the week after next traction, the week after next validate your business model. If you cannot validate a feasible, sustainable, scalable business model within 1 month, we pretty much don't invest. And that's the main difference between us.
We'll definitely get much deeper into that, but also I wanted to briefly introduce myself. So I'm Max, I did investments as well, and for the past 5 years now I'm in payments. We see lots of changes in the AI space. I feel like if you look at the trajectory of AI development, 2 years ago was very different from what we see today. I still don't think that AI are at a very advanced stage. We are still, those are still LLMs at the end of the day that we need to prompt, that we need to communicate with in order for them to return good results to us. So we're not close to sentient AI, which I think would be the ultimate definition of an AI agent. But when they are, then I guess we move over to the next phase of AI development, which could be much more advanced than whatever we see today, and it will surely also be much more dangerous. And I guess from an investor point of view, we need to be more responsible in what we support and how we support it. And so, but jumping much deeper into you, Poseidon, you seem like an outlier yourself. Based on the story, and we understand the 1 month kind of fast traction kind of cycle that you're looking out for. But how do you identify outstanding talent or outliers? Like, is there, I guess, something that you are biased on, and how do you do due diligence on that?
We're very biased. We're very, very biased, as indicated in our name, Outliers One. We like to identify outliers teams. And until today, I would say I still couldn't come up with a finite definition about who is an outlier, who is not. Back 10 years ago, when we were students, my general perception about these outliers, who identified to this Slack group, we have 88 students back at MIT. I would say those are people who have radical minds, solid hands, and unique stores. That's it. But until today, when we become Outliers Fund, we need to be responsible to our LPs, GPs behind us. We proactively identify teams that not only have a Nikola Tesla, but also Thomas Edison. What kind of people is, or founders considered Nikola Tesla? I would say those founders whose mind is all about pushing the boundaries of technology or even scientific research, who don't really talk much about storytelling, fundraising, branding, PR, marketing. But on the other side, we have seen a lot of these type of Nikola Tesla type of founders in Web3 fail dramatically because they didn't got paired with a very successful Thomas Edison. What kind of founders are considered Thomas Edison? I would say those people who are very sharp in terms of community building, PR marketing, business model, storytelling, fundraising. And then so no matter in Web3, AI, quantum computing, or space travel that we are identifying, this is to the highest level metrics for us to identify whether this team, we don't invest in solo founder, by the way, we at least invest in a team that have two types of different founders that come with different mindset and different skill set, which is very complementary. And you can see that from their early stage of Apple computers, or Microsoft, or even Facebook. Almost all the most successful companies from Web 1, Web 2, Web 3, software, internet, sharing economy, I consider most successful ones are at least having these two different complementary type of founders. And another point that I want to make is a debate within our team. Like our team currently is comprised of 5 investment decision committee members, short for IC board members. And I believe a lot of you guys, if you have been sitting as a GP on a VC fund, you definitely have been through this process every bi-weekly Monday. You need to sit in a board meeting and then debate with each other, reaching a consensus. And if not reaching a consensus, entering into a voting process. And most firms probably have 4 out of 5 voting or 3 out of 5 voting to put through an investment deal to be invested by this firm. But I come to slap my face by realizing in the past 10 years, we have invested in 56 startups, and there's 3 of them that have ended up returning over 100x. None of these 3 have passed through our IC board member. These 3 come across our firm in a very similar way. It is when it got pushed to our investment committee, they received 4 no or 5 no. And then one analyst or one partner, for no reason, cannot convince other partners, other IC board member, but just feel like he wanted to invest in this founder so much, so badly, that he would rather invest in his own personal capital. And it ended up becoming Binance, ended up becoming Ethereum, ended up becoming those over 100x deal. So right now, to accommodate this kind of outliers, as indicated in our funds firm name, we innovate a new mechanism within our firm called silver bullets. If there is every partners based on the capital they raise into this fund have been allocated several silver bullets per annum based on how much funding you brought into this fund. For example, if I have 3 silver bullets and I identify the next generation of Vitalik or other strong founders that I cannot convince other IC board members to invest in, I might execute the silver bullets by using my own capital, GP commitment capital to invest. Which means in the end, if it turns out to be super successful, I get way more GP carry interest than all the other 4 partners who vote no. But if it ended up being very failure, I need to account for that loss by using my personal capital. And that's some trick for us to capture outliers.
Yep.
Yeah, and because I think the process of having intern analysts, associates, sourcing deals, vetting deals, and then having junior partners, senior partners forming an investment committee, this process is average out and average out. And if you average out so many times, eventually all the VC fund worldwide will have similar similar performance, that is the market beta. Like if crypto funds in the past 4 years, 5 years, in general have 2 to 3x, then your fund will end up having 2 to 3x. The only reason or secret for you to outperform the market will be relying on someone who is so insightful to invest in some founders early with lower valuation, with better terms, that is due to other VC funds investors not interested.
I mean, that was actually really insightful. I would love to jump much deeper into it, but unfortunately we don't have time for that. But I have one burning question to you, Jessie. I mean, we could probably say you're definitely an outlier as well, since you raised successfully multiple times. I would love to understand, in terms of risk for your product as well, how do you foresee the impact of AI to SoSoValue, and maybe how are you using it for your product and your company?
As someone who sit on the other side of the table at the IC process, I totally echo what you mentioned. The first check that we wrote is actually from one very visionary founder of the firm that just says like blanket yes, and then the rest is just easier. Because at first, when it comes to us, we have to convince them like, oh, how do you make money? Right, but we're quite early on at a point, like if we have a proven revenue track at a point, because we have already attractions, and if we monetize too early, we're losing the traction. And to go back to your questions, I think in Web3, for fundraising and building a successful product is not that different from Web2 or prior, right? You need to go back to the fundamentals of you have to build a product that people actually need and love and have a PMF, product market fit, so to speak. And because we are using our products as a very core group, as investors, we understand the pain points super well. So when we come up with it, everything is built for us, like we are the core users. And AI was not really put into our BP just to add more zeros to our evaluation. In the very first place, we saw a real use case that it could help us, instead of 20 people in our research group, now we can use 1 or maybe 2. And we can hire the best minds in the world utilizing the Web3 tokenomics way to incentivize them to help us train the AI to understand crypto super well, so that we can have a model that we can open up to all. The AI model that actually you can use now on the app to train your own personalized investor assistant, because this is our pain point. Otherwise, we'd be paying them on our payroll, and now we're just paying ChatGPT. And as of last month, we are shifting that budget to DeepSeek as well to develop our own model. So we're constantly at the forefront of it because we feel the pain point and we feel the benefits of the technology. And there are so many, I don't know whether investors, you're so tired of seeing AI crypto. There's so many of it just like narrated, and people are super blasé about it, but there's actually real use cases if you think of it. And we're super bullish on this in the long haul. And as of the risk, I think that's just the nature of innovation, right? It always comes hand in hand. And right now we're using what AI is doing best, and the pain point we're feeling is there's no package of information out there, there's just too much. What is lacking is a structural way for us to understand this market better, so that more people can be a part of this. We are really lucky to be in this room, to be honest, to be at the forefront of this crypto innovation. We're still super early, and for us to reach the 300 trillion, so for the US retirement funds to invest in crypto, we have a really long way to go, and I believe that AI would be the driving force of that behind.
So I think we're closing down the end of this panel. I think this was really insightful. As always, time is flying, so I urge everyone who wants to talk to these panelists to just catch them when they're free after this. They might leave, so you better be quick. I had a lot of fun talking to you guys. I have many more questions. Maybe we can chat after this. But thanks for joining today, and hope you have a good conference for the rest of the day and the week.